Hello and welcome, a very warm welcome from my side. My name is Guntram Wolff and I'm the director of Bruegel, and it's a great honor to welcome you today to this session on monetary policy after the pandemic. So what is our monetary policy framework going to look like? How should it evolve? It is for Bruegel and for us as an institution an important moment, also because our chairman, Jean-Claude Trichet, after almost 9 years of service, is leaving us today. He had his last board meeting today. And we did want to have, I have to say, a proper farewell in which we have a dinner and can all meet among friends here in Brussels. Now, that was the plan early this year. I think it's not the only thing that looked differently than planned this year. The pandemic made it impossible for us, unfortunately, to have a real dinner and a real farewell. I'm very much hoping we can do that very soon. But at least we have the opportunity to meet and discuss here in this virtual panel. And of course, I do want to still take the moment to express, Jean-Claude, my gratitude to you. It's been absolutely fantastic to work with you, a great European in the last, 8.5 years. Under your guidance, I've learned so much. And I really have to say I was always impressed by your intellectual curiosity. On all issues, you were asking questions, you were interested in the substance. I was also impressed by how strongly you always defended our intellectual independence, and I think I can speak on behalf of all of Bruegel staff, all Bruegel scholars, and of course of myself. Your support for our intellectual independence was absolutely critical, and it goes usually hand in hand with the intellectual curiosity. Intellectual curiosity and intellectual independence really go hand in hand. And last but not least, Jean-Claude, I do want to thank you for really almost 9 years of constant guidance on all kinds of matters. And when you direct an institution, a growing institution like Bruegel, there's always a lot of issues that come on the table of the director, and I could really trust you in the last years, in your friendship, in your advice, in your guidance. And so really thank you very much, Jean-Claude, for this wonderful period. And since you have become the honorary chairman of Bruegel, it's not the end of our relation. We will, of course, stay in very close contact and continue to exchange, I'm sure. I have also the pleasure now to welcome our incoming chairman, Erkki Liikanen, who will chair the session today. And let me also welcome very much our guests for this panel, Yellen and Governor Zhou from the People's Bank of China. Yellen, former Chairwoman of the Federal Reserve, Governor Zhou, former governor of the Central Bank of China, People's Bank of China. And of course, Jean-Claude, you will participate with the European hat on as the former president of the European Central Bank. And without much further ado, let me again express my gratitude to you, Jean-Claude, but also express my gratitude to Erkki Liikanen for having agreed to chair our institution. And I very much look forward, Erkki, also to working with you in the coming years. Thank you so much. And over to you, Erkki.
Thank you very much, Guntram. When I see the faces of Janet, Jean-Claude, and Governor Zhou, I somehow have a sense of history, that. And actually, I hope you feel the same, because these great personalities have been outstanding leaders for central banking during the last 20 years or even more. And there are many, many memories. No history book can be written about these decades without them. It's a great privilege for Bruegel, Jean-Claude, for all of us that you are able to participate with us here today. And we have agreed that Janet would start. Everybody knows Janet Yellen, but just 2-3 words, because as we all know, she served with an impressive record as the chair of Fed from 2014 and 18. But before that, she was already vice chair. She was president of San Francisco Fed. She was leading economic advisors. And perhaps still above all, she was also a great academic and teacher. She even came far away into the north to teach one generation of young PhD economists when she was in her 30s. Janet was assisting James Tobin. These young economists never forget it, and they have served us, our country well. So Janet, floor is yours.
Thank you so much, Erkki. And let me begin by congratulating Jean-Claude on a very successful term as chair of Bruegel. Through this service and in so many other ways, you contribute enormously to our understanding of the most important economic policy issues of our day, and particularly to those facing central banks. The policy challenges facing central banks have evolved more than I would have imagined possible during the time that we have served as central bankers. Jean-Claude, I believe that we first met at the BIS in November of 2010. And the Fed at that time was just delving into the world of unconventional monetary policy. Jean-Claude presided over the BIS's Sunday night dinners, where leading central bankers engage in intimate and friendly, but also very frank conversation. At my first dinner, Jean-Claude, I remember your introducing me to the group and giving me a very warm welcome in your elegant way. But you always insisted on substantive conversation. And that night, I remember finding myself on the hot seat trying to explain to this exceptionally knowledgeable group why the Fed had just a couple of days before announced a $600 billion asset purchase program. The group was concerned about how the Fed's actions were impacting global markets and worried about conditions in their own countries. I've enjoyed many engaging discussions with you, Jean-Claude, over many years and in different venues, and your thinking has very much informed my understanding of the challenges facing central banks. When Jean-Claude and I began our careers in central banking, the challenge was to bring inflation down and keep it under control. And achieving that aim required establishing a credible commitment to boost short-term interest rates sufficiently when inflation reared its ugly head. In today's world, central bankers also need to establish credibility, but now it's to boost inflation when it's stuck below target levels and not to allow it to drift down for a prolonged period. For most developed countries' central banks, this requires the use of unconventional policies on an ongoing basis. Well before the pandemic struck, it had become clear that the challenge facing central banks had changed completely, and that in the environment we now face, pushing inflation up is not only necessary, but exceptionally and unexpectedly difficult. The Federal Reserve cut its target short-term interest rate effectively to 0 in December of 2008. That was shortly after the failure of Lehman. And at the time, the FOMC statement said it expected to keep it there for some time. That was America's first experience with the liquidity trap since the Great Depression. And I frankly never imagined that some time would translate into 7 full years, and that inflation, even after the unemployment rate had declined to 3.5%, which is well below estimates of its longer run normal level, inflation would still not stably reach 2%. Over the past decade, inflation has averaged only 1.5% in the United States. And now following the pandemic, we again find ourselves in the middle of another zero lower bound episode, with inflation slipping well below the Fed's 2% objective. The problem that central banks are dealing with is secular stagnation, which is resulting in a world in which the normal level of interest rates is now exceptionally low. This reflects a surfeit of saving and weak investment spending in developed economies, likely reflecting slow productivity growth and aging populations. A decline in the level of equilibrium or neutral real interest rates has deprived central banks of much of the room that they had to conduct monetary policy using the normal tool of varying short-term policy rates. In the typical recession, the Fed cut short rates by 500 basis points. But before the pandemic, estimates placed the neutral level of nominal short rates at only 2.5%. That provides far less scope for monetary policy to respond to shocks. And unfortunately, the crisis could easily depress normal yields yet further. Research suggests that with a neutral rate this low, monetary policy is likely to be constrained by the effective lower bound as much as 40% of the time. The implication is that asset purchases, forward guidance, and other unconventional policies are here to stay, and we should probably stop thinking of them as unconventional since they're the new normal. Last week, the Fed took a further step to position itself to address the problems created by low neutral rates and the effective lower bound. And it wouldn't surprise me if other central banks eventually follow suit. It adjusted its monetary policy framework and strategy, embracing an approach called flexible average inflation targeting. Prior to this change, the Fed's objective was to strive for 2% inflation at all times. That was true regardless of whether inflation had previously exceeded or fallen short of this target. In other words, the Fed let bygones be bygones with respect to its inflation objective. The new framework instead embraces a makeup strategy in which a long period of inflation below 2%, such as we've had since the 2008 financial crisis, calls for a period of inflation modestly above 2% for long enough that inflation roughly averages 2% over time. The overshoot of 2% inflation is intended to be transitory, not permanent. The change in interpretation of the inflation objective is important because without it, there's a danger that inflation expectations will slip below 2% over time. And since inflation expectations drive inflation itself, this would be a dangerous development. It would serve to push inflation and nominal yields yet lower, intensifying the problems associated with the effective lower bound. I expect that the Fed will follow this decision with forward guidance that establishes economic benchmarks or thresholds that will be used in deciding how long the target short rate should remain at zero. One way or another, my guess is that we're in for a very long period of exceptionally low rates and asset purchases. Another change in the environment since I began my career in central banking is that we have seen a flattening of the Phillips curve. Over the last decade, inflation has shown very little responsiveness to changes in labor market slack or economic activity. And that suggests that unemployment may need to fall to very low levels during the next expansion and stay at very low levels for quite a long time for inflation to rise not just 2, but somewhat above 2%. A significant concern is that such a low interest rate, tight labor market environment may breed risks to financial stability. I worry it will foster reach for yield by behavior by investors and may touch off asset bubbles and rapid credit growth, which are the typical antecedents of financial market instability. We did a great deal in the aftermath of the 2008 crisis to shore up the banking system and to address weaknesses in derivative markets and in payment, settlement, and clearing systems. But we've done much less to address risks in the shadow banking sector. And I think risks have shifted there in response to banking regulation. We saw during the pandemic how significant those risks now are. In mid-March, as concern about the pandemic escalated, financial markets came under extreme stress. And in the United States, the Fed was forced to intervene massively on an emergency basis to stem asset fire sales and contagion and to keep credit flowing. Macroprudential tools will be needed to address the emergence of such imbalances in the future before they become major threats. But at least in the United States, the available macroprudential toolkit is exceptionally limited. That concerns me, and I believe it's an issue that needs to be addressed soon if we're to reconcile price stability and financial stability objectives. So let me stop there with those opening comments, and I look forward to our further discussion.
Thank you very much, Janet, for your very thoughtful comments. I'm sure we will come back to the issues of new framework and also perhaps financial stability, which may be a big challenge when rates will be low for longer. And we are happy to have with us Governor Zhou, who served almost 15 years as the governor of People's Bank of China. He is largely given credit for the Chinese financial reform agenda, including liberalization of interest rates and exchange rates. I was happy to learn to know him when I was a junior member and joined the Basel Club, and we mainly spoke about economics and monetary policy. But first question, Governor Zhou asked me, how popular is Jean Sibelius in Finland? And I thought it's quite an interesting group of people I'm seeing there. And I later gave him all 7 symphonies of Sibelius. A month later, he came back, said that there were 2 of those which were new to me, which was quite, quite impressive. Thank you very much, Governor Zhou, for joining us, and I give the floor to you.
Thank you very much, Erkki. It's my great pleasure to see my old friend Jean-Claude, Chairman Yellen, and also Governor Erkki Liikanen online. I also would like to thank Mr. Wolff for his kind invitation. Let me congratulate Jean-Claude for his great and very successful leadership in Bruegel, which has been conducting a big thinking on Europe and on the whole world. I especially thank Jean-Claude for his support to bring the Bruegel and the Boao Forum. Boao Forum is a so-called Boao Forum for Asia. So to strengthen the communication between Asia and Europe. And also Jean-Claude has been giving great support for a so-called international financial forum which have annual meetings each year in China. I would like to see it's Erkki is going to guide the Bruegel to play as a key think tank and to give us a lot of opportunity to discuss very interesting and very important issues. Anyway, thank you very much. Let me comment on the monetary policy regarding to the pandemic and maybe what we should do after the pandemic. First, I would like to say that on the swift and bold action taken by the central bank amid the pandemic is a very correct monetary policy response. Across the world, comprehensive and unconventional policy tools have been deployed by central banks, playing vital roles in supporting the economy, especially in prevention from excessive bankruptcy, layoff, and cash flow stoppage, such as rent. The size of a balance sheet of central bank expanded enormously. Several central banks also provide expanded swap line to the other central banks to avoid a sudden stop of foreign currency financing. So I agree very much with Chairman Yellen to mention that this kind of policy making. Monetary policy by extensive liquidity pumped into the economy instantly boost the economy to fight the impact of the COVID. One that's the fiscal policy could not adopted very promptly and have some constraint. Monetary policy, to some extent, it's replace partially of some of fiscal function. I think it's necessary, but it leads to the further discussion and the consideration of monetary and fiscal relationship. Nevertheless, monetary policy are incapable to solve the distress of some industries with a sudden pause of demand and production brought by imposition of social distancing. So we should recognize that we are not very capable to deal with this kind of phenomena. But surely monetary policy play a very important role to relieve the pain of social distancing. It may also be inevitable that the low interest rates, as Chairman Yellen mentioned, and even the zero lower bound, the situation make a part of the excessive liquidity floods into the capital market and to fill potential bubbles. It seems unrealistic to have too high expectation that monetary policy can be used as a very effective structural measure to target specific sector and the economic entities. That's what we hope. That's the liquidity injected to the economy to target specific uses rather than too much to pursue the the asset market. With this caveat, the large amount of liquidity injection may raise inflation expectation. And we need to predict that the inflation in future would change its forms, definition, and the measurement. We need to study that as early as possible. After all, monetary policy is aggregate policy in nature. Fiscal policy is more inclined to target a particular group and address a structural problem. However, this conventional understanding has been challenged under the pandemic. More and more tasks are shouldered on the monetary policy, with the independence of the central bank affected. Furthermore, we need to study the exit strategy as soon as possible and to find ways to have effective deleveraging measures after the pandemic, as well as to cope with the potential asset bubble. So this is, I think that on the one hand, we firmly support the central bank policy, monetary policy response to the pandemic. But on the other hand, we should not ignore or underestimate the side effect of the current monetary policy. The second comment is on monetary policy multi-objective functions in the pandemic and after the pandemic. Under the normal economic circumstance, inflation target has become a very good choice as a single monetary policy goals, as shown by many countries' very successful practice. Nevertheless, in the past 20 years, the growing complexity of economic and financial conditions has brought up the demand for multi-objective functions of monetary policy. The past 2 decades, we witnessed the Asia financial crisis, the bubble burst, and then the September 11 incident. Later on is Enron and the Parmalat event, followed by the subprime crisis, and later on become a global financial crisis. And also some Southern European sovereign debt problem, the turmoil. So during the financial crisis and the distress, financial institutions needed some of more comprehensive monetary policy, including rescue, including financial stability policy. It's become quite a top consideration. Now, under the pandemic, monetary policy paid more attention to the GDP recovery and to create jobs. So that is what I would like to say is the phenomenon, and it's a reality that monetary policy now shifting from a single inflation targeting into dual targets or more multi-objective function. And next, we would like to comment what is the other objective candidate except the inflation. Besides the inflation targeting, the mainstream are economic growth and employment. This is particularly relevant under this pandemic. Another objective falls on the financial stability, including the crisis resolution, which has gained prominence since this global financial crisis. For many developing countries and the emerging economy, the balance of payment, international payment, would be of special importance and concerns, because balance of payment problem may cause external payment and debt problem, and also consequent the exchange rate regimes and related monetary policy response to that. Maybe for advanced economy, the balance payment is not that important, but for I think for many developing countries and the emerging economy, they have to pay a lot of attention in their objective function to consider the balance payment. Moreover, in the globe, there are a group of transitional economy transforming from traditionally centrally planned economy to market-based economy. So monetary policy needs to assist rather than resist the reform and open up process. It's to accelerate the transition to the market-oriented economy. Without this kind of process, monetary policy could not fund a functioning transmission mechanism, and the macroeconomic entity may not respond rationally to the monetary policy. So my suggestion is to study this, to admit that central bank later on may have multi-objective functions as its mandate, rather than to ignore it or to frequently have a different explanation of inflation. That's my opinion. But we also need to recognize managing multi-objective function is a tough job for central bank. In a simplified way, an expert system may be needed to set up the weights for each objective. Some objectives may be overlapping among each other, while some others may contradict from each other. Such a relationship can be expressed in mathematical models of multi-objective optimization, where the weight of each objective in the function will be determined by economic, social, and external conditions. Additionally, the weight in the multi-objective function need to be dynamically modified with a different period and different condition. This kind of adjustment mechanism can be formed through the recursive programming model. Next is my third observation is on the coordination, or maybe the new global institution to strengthen the central bank to work together to deal with the problem like a pandemic and the forthcoming global issues. If we look back 20 years ago, monetary policy is very typical domestic policy issue. Each country have a different inflation, different monetary base, transmission mechanism, exchange rate, and the capital flow characteristic. At that time, almost nobody talked about monetary policy spillover, especially those of a large economy. Except a small group of countries, they have a dollarization. The most country, they don't have the problem with the reserve currency. And they don't rely very much on the US monetary policy making. That's the capital flow basically is reasoned by the domestic condition. But now the situation changed a lot. So in the recent years, we repeatedly to talk about monetary policy spillover, the shortage of global dollar liquidity, and we need to set up the currency swap for assisting each other, and that's it's become a headache of the capital flow. It's always trying to to find safety harbors, or sometimes this kind of capital flows may cause a kind of instability, especially for the emerging markets and some of the developing countries. And we are now facing a lot of highly indebted economy. They need to use the fiscal policy and monetary policy to deal with that. But it seems we need more of coordinated action to do that. The single country is always very difficult to solve the capital flow and highly indebted the situation. So that's my suggestions. That's after the pandemic, we need to formally reconsider as what kind of central bank cooperation we need to facing the global challenge. Of course, now we already have IMF, we also have a BIS, but however, it seems not enough. IMF, I think, can play a more important role, but legitimately, the mandate is not for some function of a global central bank. So we may study on this issue. BIS play a very important role. I especially appreciate Jean-Claude when you chair ECCs. It's give us a lot of opportunity to discuss a very important issue, and we learn a lot in that kind of communication. But actually, we need further develop some of necessary functions which can put the actions to play some kind of roles. But anyway, I think this is a very preliminary ideas, but I think if today's topic is to talk about the monetary policy after the pandemic, I think this is one thing in my mind. Thank you very much. Thank you for your attention.
Thank you very much, Governor Zhou. There are many issues to discuss later today. I'm sure one of them is the financial stability aspect, which also Janet mentioned. As Janet also said, we have learned a lot from Jean-Claude Trichet, and I was privileged to be in the Governing Council for many years when he was chairing it. And I was impressed by his experience, endless curiosity, and also instincts. Why I say this word instincts is that there were two moments where people saw it very differently, and they were August 2007 and September 2008. And I went through literature. What have the others said about it? And I found a wonderful piece from Tim Geithner's memoirs. And he talks about Monday, 15th of September. That was day after Lehman. I quote his book. My Monday morning began with a call from ECB's Jean-Claude Trichet, who had been so complimentary about our bear intervention. Now he wants to know, with a French accenting blend of astonishment and derision, whether we have lost our minds. How could we let Lehman go? Why would we want to create a global panic? It's an interesting story because when we were there, you felt from Friday night that it would be big. Nobody knew how big change it was in the financial markets and the global economy. Thank you very much, Jean-Claude, for your work during these years, ECB, BIS, and also in Bruegel. The floor is yours.
Thank you. Thank you very, very much indeed. It's a great pleasure and a great honor also, I would say, to be with Janet and Governor Zhou and yourself, Erkki, in this occasion. I have no time to respond to all the compliments I receive. That would be too long and laborious, and I do not want to take time to the very, very important issue that we are discussing right now. Let me only tell Janet that I have the memory, very precise memory of all our meetings in Basel, but also maybe she remembers, I paid a visit in San Francisco in your office of chair of the Federal Reserve there. I was myself asked to deliver a speech in Stanford University.
That's right. That's right. I do remember. So I was wrong that we first met in Basel.
Anyway, it was always an immense pleasure. And of course, always when the Fed is at stake, of course, your voice is so important. And you were listened to with extreme attention, whilst being always kind and gracious and elegant. So very, very important memory. Governor Zhou, I remember all our breakfast in Basel in particular, but also everywhere in the world, when you were asking me, what happens in Europe exactly? Can you reassure me? Will you uphold in those circumstances? And of course, it was indeed very demanding circumstances, but we hold all taken into account, even if it was quite complicated. And I have to thank you very, very much because you were absolutely key in the global economy meeting and in all our Basel meeting. Everybody was listening to you as they were listening to the Fed chair with extreme attention. And we were always very grateful because you were always candid and frank, and you expressed your views with a kind of easiness, which was very, very impressive. So the international community has to thank you very much for that. And let me only thank Erkki for his kind word. I was with Erkki in all this difficult period with my colleagues from the start of the Lehman Brothers drama up to end of 11. And we had the very, very important decision taken by Erkki and I and our colleagues to intervene as massively as possible to counter speculation in the case of Greece, Ireland, Portugal, Spain, and Italy in 10 and 11 with the so-called SMP program, which finally, of course, succeeded by many others, but we avoided the drama. And I have to thank the wisdom of Erkki, because in a board, you have always wiser people than others. And you were the wise person by excellence, if I may. So let me address the issue at stake. I would say that, of course, it's very complex, the very title of this panel, because we have the pandemic on the one hand, but we expect, of course, the pandemic will be surmounted at a certain period of time, and we will go back to many problems that we had over the last 10 years before the pandemic. We will have those problems after the pandemic, and the problems that are dealing with monetary policy strategy are particularly acute, as was already said by Jeannette and by Governor Zhou. So let me only mention en passant that I think the central banks did extremely well in the occasion of this new crisis. Everybody was expecting that they were about to be incapable to do anything because they had already used a lot of their weaponry, and many academics were really thinking that it would be very difficult for the central banks of the world, and particularly the three central banks that are here present, to cope with this extraordinary, dramatic new situation coming on top again of all what they had to do in the previous 10 years. But they demonstrated a capacity to react, which was absolutely remarkable. Speaking for the ECB, I would only mention the pandemic emergency purchase program of 1 trillion point 35 euros, which is absolutely gigantic, of course, commensurate to the problem that the ECB had to cope with. I would also mention the targeted LTROs, long-term refinancing operations, which have been also extremely impressive. As regards the governments also, I have to say that the executive branch reacted also very, very actively, being commensurate with the crisis. And for the ECB in particular, which had always called governments to step in, not to let the only game in town to be in the hands of the ECB, it was very rewarding to see the initiative which were taken, executive branches on the one hand, and also by the European institutions on the other hand. And of course, I will certainly mention the Next Generation EU initiative of 750 billion euros that was not expected before the pandemic, but proved that the European institutions and European countries were really able to take enormous decisions, even when they were considered extraordinarily difficult. And they were, by the way, extraordinarily difficult to decide upon. Now, a word on, so to close on that, the pandemic has found, very fortunately, central banks and governments up to the challenges. Now, we have to accept that at a certain moment, the pandemic will disappear, and we will have all the problems that the ECB and the Fed and the Bank of China had in mind before the pandemic, namely how to reflect, draw the lessons of all what we have observed during the past years since the last crisis, if I may, the GFC. And what about the new strategy? Of course, this new strategy will have to take into account the piling up of additional difficulties coming, which would be the legacy of the pandemic. And the legacy of the pandemic is very, very heavy. But that being said, the problems are more or less the same. And when I look at what the Federal Reserve just decided, and Janet was very eloquent on these decisions, and they are, of course, very, very important. Clearly, they could have been decided even if we didn't have the pandemic. It is really drawing the lessons from the last 10, 15 years since the great financial crisis. So I will look at it from the angle of vision, if I may, of Europe in order to complement what Jeannette said. And I would say, and this is not very flattering for Europe, obviously, that when I look at the four main points that your successor, Jeanette was mentioning as explaining the new decisions, I see potential growth rate of the economy going down. We are exactly in the same basket. In the US, it's 2.5 down to 1.8 in the words of Jay. In Europe, I would probably say from 1.8 to 1, because we have a different growth differential, potential growth differential between both sides of the Atlantic, which corresponds to demographics in particular. So a difference of 0.7, 0.8 seems to me appropriate. Interest rates, neutral interest rates, equilibrium, real interest rates, divided by 2, I would say the same for Europe, of course. And the issue of inflation that you mentioned, this flat Phillips curve and the absence of inflation, even when you have full employment. And you insisted on that, Jeanette, very much, and I fully agree with that. The difference with Europe, and that is one of the problems of Europe, is that we have full employment. We had, no, not now, of course, but we had full employment in some countries, but not in the euro area as a whole. And this fact is very, very important to understand that we have all the problems of the United States, if I may, of the US Fed, but we have an additional problem which is associated with the governance of the euro area, which is of a special nature. And to make a long story short, I would only say, at a certain moment, at any moment, there are differences in competitiveness, cost competitiveness, overall competitiveness between the various countries that are members of the euro area. The problem we have is that the inflation in the most competitive countries, I say countries with a plural, of course, is a ceiling for the, I would say, unit labor cost evolution and inflation in all other countries, because they should not lose more cost competitiveness vis-a-vis the best and the most competitive countries. And of course, that might explain why the ECB has even more problem than the US in terms of getting back to a normal inflation, because you have that ceiling. And if the most competitive countries are behaving like the US and like Japan, it puts all the others below. That I don't want to elaborate more on that, but this is a very important point. Now, very rapid reflection or meditation on the new concept of monetary policy strategy, if any is decided by the ECB, we will see. The Governing Council is reflecting on that. It is, of course, extremely important. And the fact that it's been achieved in the US is, of course, an additional reason to reflect and meditate. I would personally say, first, I'm very happy that the 2% in the US, I will never forget, and I considered it was something which was of the utmost importance, even if it was a little bit ignored by academia, namely that the US, Europe, not only the ECB, but Bank of England and Japan had the same definition of price stability, namely 2%. The concept was not exactly the same, the computation were not the same, but the 2% was approved by these major central banks. And of course, and if I may say, Governor Zhou, you're not far away from that. I mean, when I look at the rhetoric which is used in China. So the fact that we have some kind of consensus on the 2% was, in my opinion, very, very important. And I was fearing that some of us could say, well, let's go down to 1, or let's go down to 0, or let's inflate inflation and go to 4, which was, you know, of course, suggested by a number of academics, but would have been a big mistake. So I am, and I expect that the ECB will not change the 2% reference, if I may. Now, on the medium long-term concept that has been adopted by the US, I would say that the Europeans are very close to that already, because at the very beginning, the difference was that the US was more or less targeting core inflation, and we were targeting headline inflation with good arguments at the time. Maybe it can change, but that explains why it was obvious in our case that you could go up and down, and that it was reasonable to have some kind of average vision of the average inflation over time. Myself, when I wanted to make, I would say, as popular as possible the ECB, even in Germany, I was going to Berlin and I was saying the average inflation, which has been delivered by the ECB since the inception of the euro, is 1.95%. And I was very proud of that. And for me, it was a demonstration that we had delivered. So I was spontaneously reasoning in terms of average inflation over a certain period of time. Of course, in our case, it was special because the ECB did not exist before its inception, of course. So that I don't see a real issue there. I would say that perhaps core inflation should be preferred to headline inflation, which would perhaps simplify the vision by academia in particular on what the ECB is exactly doing, confirming that core inflation is very important, even if it is already more or less considered. And I have to say that I don't expect myself that we would have other objective than price stability with the appropriate qualification. And the treaty says, without prejudice to price stability, the ECB must follow all the other objectives of the European Union. So it seems to me that we have already decided that you have to, of course, be faithful to your primary mandate, but when your primary mandate is manifestly, fantastically attained, which is the case and might be the case in the future for a long period of time, then there is no problem. You have to follow and accompany the other objective of the European Union, which makes no contradiction, of course. The contradiction could perhaps exist when we are back to a normal situation in terms of inflation, which is clearly not necessarily the case very rapidly. And there, let me go to the last point I wanted to make. What are the risks at stake in those circumstances? Financial stability has been mentioned by Governor Zhou and by Jeanette. Fully agree with them. It's an enormous problem. And if we continue to be obliged to have extremely accommodating monetary policies for a long period of time, then, of course, we have to have the handling of macroprudentials as, I would say, agile as possible. Janet was clear on that and clear on the fact that maybe we would need more macroprudentials. I take it that it is true everywhere. I would say there is another element which is not negligible in the non-conventional weaponry that we have. The massive purchase of tradable securities, in particular of treasury, is a problem. And I cannot hide that I am a little bit frightened when I look at the percentage of tradable treasuries that are in the hands of the Fed or in the hands of Bank of Japan, which represents something like 45% of the outstanding amount. It seems to me that we are at the limit of what would be reasonable in terms of interaction with the governments, interaction with the treasuries, and also in terms of perhaps very abnormal, I would say, functioning of our financial markets. So there we certainly have to have a red light. In the case of Europe, we are going in the same direction, clearly, even we are not at 45. We are in between 20 and 25. But it is something which goes up, cannot go up forever. There we clearly have to understand that it is one of the area where we have, as I said, some kind of early warning. Now, of course, the main problem we have as central banks remains the fact that the Phillips curves is flat, seems to be flat for very, very profound reasons, which are probably linked to globalization, certainly linked to the bargaining power of labor being considerably diminished in practically all countries, and certainly in the advanced economies. And that is something which is both an immense social problem, an immense political problem, and an immense economic and monetary problem, because if there is no new deal as regards the bargaining power of labor, if we still have unit labor cost being flat or quasi-flat, whatever the central banks will do and are supposed to do in the future, we will not get out of our of the trap. So it seems to me that we should reflect much more on what to do. When we had inflation at the time, it seems to me that President Nixon said, I will block wages and salaries to fight inflation. Well, it's not the best way to fight inflation, obviously. But there we are in the reverse situation.
Exactly.
This is very, very strange. And again, has a monetary dimension of first magnitude, economic dimension, and I would say social political dimension. And I will stop on that if you permit, Erkki.
Thank you very much. There are a lot of questions from the audience also, but can I just come back to one which you all have mentioned, that's financial stability. Because of course, low rates for really long and high level of asset purchase programs create a risk. Do we have proper institutions for macroprudential policies at the moment? Do they have sufficient tools to tackle? Or is that the area where more should be done in the future? What do you think?
Shall I start off, Erkki?
Yes, please, Janet, yeah.
So I think it differs across countries. My sense is that in the United Kingdom, the Financial Stability Board has been given powers and tools. For example, if there's a housing bubble, they have the ability to place caps on loan to value or debt to income ratios that would tamp down some of the bubble dynamics. In the United States, we have virtually no tools of that sort. In housing, there are now much tighter standards generally that prevent some of the abuses in underwriting that led to the financial crisis. But if we thought we saw a house price bubble, the Financial Stability Oversight Council has no tools. The bank regulators have no tools. I've been concerned more recently myself during the time I was chair about leveraged lending, was worried about a buildup in non-financial corporate debt, which at the start of the pandemic was at the highest level in the United States in US history. We tried to constrain underwriting practices which were deteriorating over the last several years, really in the aftermath of the global financial crisis. We put in place some supervisory guidance. Congress pushed back, the regulators backed off. I think in the United States, there is a severe shortage of tools. The only tools I see that would allow real-time interventions when problems are building are a counter-cyclical buffer, but that only applies to the very largest institutions. And our stress tests were designed to essentially have the largest financial institutions face more severe stress and build capital buffers when times were good that could be run down later on. Recent research has suggested that really hasn't worked very well. So I think it depends on the country, but I would say in the United States, the Financial Stability Oversight Council, which was created to address financial stability risks, was given almost no powers. Its only power is to designate non-banking financial institutions that are regarded as a risk to financial stability. And even there, with respect to that power, essentially decisions during the Trump administration have led it to be constrained and, for all practical purposes, neutered. So in the United States, it's a huge problem.
Governor Zhou, how do you see the situation?
Okay, it's a very good question. In China, we have probably a little bit different situation. There's also, as Jean-Claude mentioned, that we also would like to control the inflation around 2%. For many years in the past, during my tenure, around 15 years, that's our inflation targeting was 3%. Yeah, sometimes higher, sometimes lower. Also, globally, now we have the problem to reach 2% inflation, and perhaps it may sustain for quite a long time. But in China, I think that we still have to worry about the inflation going higher than 2% or 3%. Partly because it's an emerging market characteristic. Another is that we always have a lot of monetary overhang, a lot of liquidity, a lot of that's money supply growth rate higher than the GDP growth rate. So we don't that much worry about the long period low inflation. But however, that's the trend, the basic trend is quite parallel to the global situation. So I think in our monetary policy makings, we emphasize quite much of macroprudential policy. But in the beginning of the global financial crisis, that is the end of 2008 and years 2009, we didn't use the term of macroprudential policy. What we say is similar to the countercyclicality and the policy to enhance the feedback, the negative feedback features of the financial market and financial systems. So many things are similar to the macroprudential policy, but maybe some things beyond that. For example, in the situation of inflation, asset bubble, or financial instability, we may reduce the positive feedback loops that such as circuit breaking or just cut off those of positive feedback which may create the oscillation of the financial system. Another is to adjust the parameters of feedback loop. Those of parameter, some of them similar to the capital buffers, some of supervision standard, but we can also use some of unconventional parameters trying to enhance the countercyclicality of the system. And talking about cyclicality, yeah, we do not look that much on the price stability. We also trying to look more and more to that's the asset market, especially in China, it's a stock market and real estate market. So I think that's we may also try to use simulation models to play additional roles as a stress test. So that's what I see is we still need to explore the more tool. Potentially, we have a lot of tools, but when we try to use them, we still have a lot of problem to coordinate with the other departments in the government and to communicate with the market participants. Anyway, that's we still trying to prepare either the ways to have a long-term low inflation rate, or we may have to deal with the going up inflation and the asset price and the other potential problem which may raise financial instability. Thank you.
Thank you very much. Jean-Claude, how do you see the situation?
Well, you know the situation, my dear.
Yeah, how do you comment?
I would say it's less dramatic, perhaps, than is the case, perhaps, in the US, but we are far from what would be the optimal. We have the European Systemic Risk Board, which was created as one of the major lessons drawn from the great financial crisis. And I would say that all taken into account, it functions. It is perfectly able to give messages to various countries in asking them to activate their counter-cyclical buffer and to ask, again, appropriate response in terms of macroprudentials in a number of countries. So, and of course, in our own framework, a lot of decisions are taken not at the level of the European area or European Union as a whole, but at the level of the various countries concerned, which is not absurd because we have really very big differences in terms of financial cycle in the different countries. So that being said, I must mention en passant that the non-banks, the enormous accumulation of risks or financial risks that is embedded in the outstanding, I would say, outstanding volume of markets, some markets, many markets, is also a real issue. And I don't know that we are really able to control that. It's the international community is working a lot on that. My understanding is that Basel is working a lot on that. The Financial Stability Board is working a lot on that, but we are far from being reassured. And I am myself extremely worried when I look at the incredible rapidity of the growth of the volume of this outstanding and piling up of non-banks, I would say, controlled institutions or regulated institutions like banks, like funds companies, and like pension funds. But all the other area is, to me, remains very dangerous. And of course, the fact that we will have for a long period of time to come still very low interest rates, nominal interest rates that are so low, is a problem. a real big problem.
Thank you very much. There are many questions from the audience, and 2 or 3 of them touch actually central bank independence. They ask that if there are more tasks than pure monetary policy, is there risk for independence, like macroprudential? But there will be more need to coordinate monetary policies and fiscal policies. Is there risk that that will endanger independence? How do you see the situation about independence today? Are there risks for independence of central banks more than before? Where Jean-Claude starts, you have a very strong treaty anyhow. Please, Jean-Claude.
No, very rapidly, I would only say that if we give too many objectives to the central bank, of course, then the central bank would be more or less the master of organizing the hierarchy between the various objectives. And it seems to me that unavoidably it would be considered by the political sphere as something which is abnormal. And then the political sphere could embark on asking the central bank to do this and to do that. And then, of course, we are lost. There is no more independence. So there is a risk to enrich too much, in my opinion, the objectives of the central bank, first. Second, I have to say that the central banks of all countries have demonstrated brilliantly that in case there are dramatic problems that are extraordinarily demanding and are acute on a very short-term basis, they are able to respond in a way which has been, as I already said, commensurate with the crisis and would not have been responded by the executive branches or by the parliament with this rapidity and this boldness. So independence generally is considered resistance of the central bank against pressure coming from the political sphere. But what we had observed at the time is exactly the contrary. Independence used by the central bank, the Fed, the ECB, Bank of China, at a moment where immediate decision had to be taken, which would have been probably considered too bold by the political sphere. In the US, the demonstration was given by the TARP program, refused by the Congress as a start, and at a time when the central bank had already taken a lot of decisions which were appropriate. So I think we have a real case for preserving as much as possible independence of central bank. When I look at the ECB, I have no doubt the ECB is independent, full stop. And I have to say that having seen what Janet did and what Jay has done very wisely in a recent period, as well as Ben, it seems to me that thanks to the complexity of the political system in the US, the independence has been preserved. Yeah.
Janet, I mean, we all follow, of course,
Yes,
media discussion.
Yeah. Well, I'd say for a very long time, the Fed has had a dual mandate, price stability and maximum employment rather than a single mandate. And most of the time, that hasn't created conflicts. When it has created conflicts, the Fed has developed a way to manage the trade-offs that exist between the two. But most of the time, those two goals have been complementary and not created conflicts and threats to independence. In the emergency programs, when we've had financial crises, including after the pandemic, that I would call a near financial crisis. I believe it would have been a financial crisis, except for dramatic, as Jean-Claude said, interventions, utterly unprecedented, really in order of magnitude larger than the interventions that occurred in 2008. These are explicitly joint interventions with the Fed and the Treasury. I think partly how the Fed's independence is maintained is the Fed has a very clear standard that it cannot take risk in its lending. Any lending that it does must be well secured. And that means that when it sets up facilities that are supplying credit to Main Street firms, to large businesses, to municipalities, as it's done after the financial crisis, there is explicit taxpayer support. Congress allocated $450 billion for that. Treasury approvals required. This is similar to the way things were structured in 2008. And well, there always is a threat that the Fed will be leaned on to do more than they're comfortable with. I think we found after 2008 that when the emergency ended, the Fed's independence was not compromised. And I expect that to be the case now as well. You know, in macroprudential policy, when you're talking about imposing stricter lending standards, I think that's an area where there's likely to be more of a threat to independence if a central bank is assigned that. And my own inclination would be to have a financial stability board, something like what I hope the Financial Stability Oversight Council in the United States would be, an independent entity that has a clear charge and utilizes those tools rather than it being a central bank responsibility.
Thank you very much, Janet. Governor Zhou.
I think it's a very interesting question. In my mind, the central bank independence is a very important issue. We always hope to develop more independence of the central bank in China, to isolate the political pressure or fiscal pressures to the central bank. But we also realize that in many emerging markets, the degree of central bank independence is not high. The BIS actually collect a lot of case study to show that the different kind of intervention into the central bank independence. I think in my mind, I would like to emphasize more the central bankers should have a more professional spirit, and that their mentality should be independent from the other government officials. So it should be different. With this professional mentality, that you could argue with the government intervention or the other intervention, whether central bank is right or the others are right. You know that in many of the emerging markets, if you look at the central bank's teams, including governor, deputy governors, that's directors, you would find out that we still need to strengthen the professional spirit and the independence of their mentality. I agree with Jean-Claude that if you would like to carry out multi-objective, then it may reduce the central bank independence. I think it's the same that in the pandemic period, it's also a pressure to reduce central bank independence. And in some special case, that's I mean, that's in U.S. Current administration, there is a lot of talks which jeopardize the central bank independence. So not only multi-objective function, there are some other reasons which may reduce central bank independence. In China, my realization is when we talk about independence, we mainly focus on monetary policy making, should be independent. But however, since we have some things to do with deal with financial stability, with exchange rate, so inevitable, you need to communicate with the others, and the others may say some things which to some extent affect the independent decision making. So I still would like to say that we're talking about the independence, we focus on monetary policy. Those of other things, you cannot emphasize that much of central bank independence. And the most important independence, in my mind, is trying to isolate the pressure of the government overspending. That means the fiscal deficit, the budget discipline, whether they may use some of the pressure to overdraw from central bank, from the banking community, actually for the fiscal deficit and the government overspending. So I think in the coming years, we still going to, you know, that's to try ourselves, to try our best to reach, to isolate that kind of pressure, to reach this definition of central bank independence. Thank you.
Thank you very much. We have many questions. We are running out of time. Can I put you one question? And that's actually related to Jackson Hole Symposium. It was a very interesting one because of monetary policy strategy. There's a lot about communication to people. You know, of course, historically, we remember Alan Greenspan, he communicated to markets. He said, if somebody understood me, he must be wrong. wrong. But this emphasis, moving from communicating with markets and experts and communicating to people, it has been a long process. Do you feel this kind of major change in this context today? Janet, what do you say? You have been to town halls, many town halls, yes.
Yes, I mean, my view is that it is very important to communicate to people and not just to sophisticated players in markets, although the communications to markets is important as well. And that's part of the central bank's transmission mechanism. But what central banks do, what they're trying to achieve, is really not at all well understood among the general public. When I was chair, I did my best to try to talk about what the central objectives were that the Fed was trying to achieve and to go before a broad set of audiences. Chair Powell has done even more than I've done. And I think a purpose of the review that just led to this change in strategy, there was broad outreach to many different members of the community in the United States, a project called Fed Listens, meetings around the country with members of labor, community activists, community development individuals, members of the business community, to listen and talk about what the Fed was doing. And even if there's not a technical understanding of the tools of monetary policy, the public has to trust that a central bank is not purely pursuing the goals and objectives of the financial community, but is out to make everyone, ordinary citizens, their lives better off. And that's critical to support for a central bank.
Thank you. Governor Zhou, you just mentioned how high professionalism, independence and bankers is important. How you combine this with communicating to people? Is that part of the professionalism?
I believe it's open. I believe many central bankers had a lot of experience in the occasion of public communication, in the occasion of a press conference, and also in policy discussion rooms. That's in my memories. It's you need always to make a certain kind of balance. That's when you talk, you try to talk with the public. That's you need simultaneously consider what would be the response of the government, what would be the realization of the parliament. So you try to not to make the mistake when the one group would satisfy what you say, and the others may strongly criticize you and may create the problem for your policy implementation. So I think it's always a complicated issue. But my experience is to say that when you try to guide the inflation expectations, you mainly deal with the general public. You try to explain the monetary policy makings and try to convey the signals for them to understand that what is the trend of inflation and why the monetary policy should go in this way or that way to deal with the inflation. But the question always not contained only about the inflation expectation. And a lot of questions sometimes related to the global financial crisis, the financial stability, exchange rate issues, or maybe the payment systems. So when you got this kind of questions, you need to know that central bank the opinion should be well coordinated with the government, with the parliament, with the other parts of the department. So actually, we try to make a certain kind of trade-off or balance to communicate together with public, government, parliament, the expertise group, different interest group. So we need to be careful about that. And it's also a dynamic process. It's dependent on how the central bank education process going on. If you already put a lot of education knowledge about financial stability, about exchange rate, about balance of payment, then the communication becomes easier. So that's my realization.
Thank you, Jean-Claude. I give you the last word here. You have been communicating ECB where there are many languages and even cultures. You mentioned one country where 9.95 was particularly important. How would you comment this discussion?
Well, first of all, I would say that since the very beginning of the ECB, we had the concept of the press conference every month in order to have the most direct communication possible not only with the market, which was done by all central banks of the world, but with the people. Of course, that was absolutely necessary also because we were in a universe of many countries and many languages. And if we didn't have from the very beginning terms of reference for communication, it would have been total cacophony because everybody would have spoken in his own language. So I think we did well to have this press conference, this regular monthly press conference. By the way, they are generalized now because they appear to be appropriate.
It's true.
In terms of crisis. So the concept was a good one. Of course, to speak like that in a single language, which is English, because it's the language which is used in terms of communication, does not equal communication, local, national communication. The central banks, the national central banks, are supposed to do that in our own system. They are close to their own people by definition, and they are supposed to speak by one voice, the voice of the governing council. It might be a little bit difficult from time to time, but this is the theory. Now, what we experienced recently, it seems to me, the ECB, as well the Fed and others, and Governor Zhou was eloquent on that, is to be in direct contact with the population itself, to shop around as ECB, as Fed, as Bank of China. And that is new to my understanding. I would say Bruegel itself has embarked on a totally different concept, which is to go on the spot in the various countries, in the various cities and so forth. And this concept of the institution X or Y listens, meaning listens to the people itself, is something which I understand is born out of the crisis and very, very important.
Thank you very much, Jean-Claude. And I want to thank you all for this great panel. It was really great that Janet, you were able to come join us,
Pleasure,
and Governor
thank you.
Zhou. Great to see you all. And above all, Jean-Claude, thank you very much for your inspiration during all these years, your support also for Bruegel. I'm sure we will see somewhere.
So thank you.
Bruegel 30 is one for you, but
Yes.
there will be many places. Yeah.
All the best for your
Thank you very much, and
Yeah,
have a nice autumn. Thank you very
Yeah.
much.
very good. Thank you.
Thank you.